All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Summer 2021 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. Up next, we have a panel presentation, which we hope you all will find insightful, covering next generation seed companies that are changing agriculture, with three of the leading executives from the agricultural industry and one of the top agricultural research analysts in the space as well. Before I begin, for those not familiar, Lytham Partners is one of the leading investor relations firms in the U.S. More than 2 decades of corporate experience, we have built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality and focused institutional investors. Today's event is hopefully yet another example where we can bring value to multiple constituents. For today's event, I've brought in Ben Klieve with Lake Street Capital Partners to act as our moderator. Ben serves as senior research analyst with experience in the food and agribusiness industry. He focuses on companies leveraging unique technologies or production methods such as autonomous machinery, biological chemicals, gene editing, land-based aquaculture, and vertical farming. Before I turn it over to Ben, let me remind everyone that if we can be of assistance coordinating any meetings with today's panelists, please don't hesitate to reach out to me. My email is blum, B-L-U-M, @lythampartners.com. Ben, let me turn the floor over to you, and thank you for leading today's discussion.
All right, thanks for having me, Robert. Thanks for the introduction, and yeah, welcome everybody this morning. So as Robert said, Ben Klieve, equity research analyst here at Lake Street. Robert touched on my coverage universe broadly as trying to introduce companies to the market here that have what I think is really next generation approaches to agriculture. And one of the things that he noted was gene editing. And I'll say broadly, I think one of the things that's very compelling about the ag industry is investing in companies that are able to leverage genetic advancements, be it gene editing or other technologies, to really develop crops here that have really next generation implications on the agriculture industry. And so with that being said, we have a panel today that highlights 3 companies here that I think really represent that value proposition. The motley crew that you all see on the screen here includes Mark Wong, CEO of S&W Seed Co, Federico Trucco, CEO of Bioceres, and Mike DeCamp, CEO of CoverCress. In a moment, I'll let everybody introduce themselves here. But before I do, I kind of want to highlight what everybody can expect here from the panel today. Again, when I look at agriculture, I think one of the most compelling assets a company can have is proprietary and next generation genetics. At the end of the day, agriculture starts with a seed. And when companies have a high value seed that has some kind of proprietary element to it, I think there's a real investment proposition to be had in those companies. Now, broadly, the seed business is characterized, in my view, as one where there really are considerable barriers to entry and very long development times. But once those products really enter the market, I think there's also a very long multi-decade life cycle. And the seed specifically really represents, I think, one of the most compelling margin structures of any ag input. So, I view this market as a pretty favorable dynamic when you can identify the companies that really are in that niche. But that being said, I think this is a sector that is also kind of misunderstood by a lot of investors who really perceive the major companies of the world like Corteva, Bayer, BASF to really dominate the market. But I think what we have today is a collection of companies that really represent kind of the next generation of seed companies. And within their niches, they've developed products that I think are poised to really deliver that kind of multi-decade, high margin life cycle that I just noted. So, today I hope everybody hears this value proposition come across loud and clear from each of these companies, and I think I think we will certainly do so. Now, with that being said, I'd like to introduce the panel. So, first up, we have Mark Wong, CEO of S&W Seed Co. This is a very interesting seed company focused on middle market crops. And Mark, I'm wondering if you can tell the group today a bit about S&W Seed and touch on kind of the next generation products that you have approaching commercialization today.
Thanks, Ben. So welcome everyone to the panel. So I've been in the seed industry for about 40 years. So I've seen sort of the description that Ben's given about the industry's development and the focus of the 3 companies that you have today on genetics and developing proprietary products through different technologies. Our company is a 20-year-old seed company. We are, again, a proprietary integrated seed company, which means we do plant breeding to generate improved proprietary products. We produce the seeds ourselves, and we clean them, and we market and sell them to our customers all around the world. We also have technology in tissue culture, and we've used that to develop a trait that I think we're going to talk about later called double team in one of our crops, which is sorghum. So we are about 100 million in sales. We are around the world. We operate out of two home markets, Australia and the US, and we sell 5 different species, basically alfalfa, sorghum, which I've mentioned, sunflower, stevia, and the pasture crops. So we are focused on the middle market crops, we call them, as Ben said, which are really the crops that are of smaller acreage than corn, soybeans, and cotton, which are the major commercial crops in the worldwide seed market. So that's my short introduction, Ben. Thanks so much.
No, thanks for being here, Mark. Next up, we have Federico Trucco, CEO of Bioceres. This is a very interesting diversified ag company traded on the NASDAQ, but based in Argentina. Federico, can you talk a bit about Bioceres and introduce HB4, the next generation seed product that you guys are set to launch here?
Sure. So thanks, Ben, for the intro and the invitation to the panel, and it's great to be here. Hope everyone is having a good morning today. Bioceres is a company, as Ben indicated, that started some 20 years ago in Latin America. It was founded by a group of farmers that led the conservation agriculture movement in the region and were compelled to invest in next generation technologies around seeds and other ag inputs to improve agriculture productivity and also help agriculture transition to regenerative practices, which I think are very important today in the face of climate change. No? As a company, we have a strong portfolio of products with over 200 patents in our portfolio, 300 registered products that we sell in over 30 different countries. We sell in the crop nutrition, crop protection, and seed and integrated product space. And I would argue we are globally known for 2 technologies, essentially. One that is around biological nutrition, particularly in soybeans. We're global leaders in soybean inoculants that are microorganisms applied to soybean seeds at planting for them to fix nitrogen directly from the atmosphere. So that's kind of a legacy technology in which we have created a global reputation. And more recently, we're also globally known for being the first company to have a commercially approved biotech event for drought tolerance in 2 major row crops, soybean and wheat. That is a technology called HB4 that can improve productivity between 10 and 20% under drought conditions, and also improve the CO2 offsettings by about 7% compared to conventional wheat and soy. So that is a technology I'll probably discuss more as the panel goes forward, because it represents a significant opportunity for growth in our seed and integrated product segment.
Great, I think that's exactly right. Thanks for that overview, Federico. And finally, we have Mike DeCamp, CEO of CoverCress. This is a private company based out of St. Louis that's bringing what I think is really a truly novel product to the market here, in my view. Mike, can you introduce CoverCress and outline the product here that you guys have developed and are set to launch?
Sure thing, Ben. Thanks for inviting me on the panel, and Robert, thanks for hosting this event, and really nice to meet Mark and Federico on the panel as well. So we're an ag tech startup. As Ben mentioned, we're located in St. Louis. We're part of, and for those you might be familiar, we're part of the 39 North ecosystem in St. Louis, where there are other startups like Benson Hill, who's recently gotten some interesting press as they've migrated from private to public space through a SPAC. And then there are several R&D resources, really world-class R&D resources available to startups like us in this ecosystem, including the Danforth Plant Science Center. We were founded in 2013, and over the last 8 years, we've really been focused solely on R&D efforts, with a focus on breeding and then later bringing in gene editing technology to convert a wild type winter annual, really known as a weed in the Midwest, into a new rotational crop for Midwest growers. Our product, CoverCress, is an oil seed crop. It grows over winter between a corn and soybean, or a soybean and corn rotation. And the value proposition that we see for the grower is that opportunity to have a third cash crop in their rotation, something that they can get in 2 growing seasons. So 3 crops in 2 growing seasons, while also adding the soil health and environmental benefits of a cover crop. And we'll talk a little bit more about what a cover crop is here, I think, as we move forward. And I'll give some more information about what CoverCress is doing. But we're now at the juncture in the company where we're focusing on our commercialization efforts, and I'll share some more information about where that sits and what our plans are.
Perfect. Thanks, Mike. Thanks, everybody, for those introductions. I think you guys all brought up a number of really, really important points here that I'd like to elaborate on. Mark, first, you talked about the double team sorghum that you guys are launching. This is an herbicide resistant sorghum, and when I talk about this one with investors, there's a general understanding, I think, of herbicide resistant traits in the market, given how pervasive they are in crops like corn and soybean, et cetera. I think that this trait in a crop like sorghum really surprises some folks. Can you talk a bit about the sorghum market today, how farmers combat weeds, and also talk about kind of the relative market adoption you're looking for as you launch this product, with sorghum growers buying the seed, or even from farmers planting more sorghum acres because they now have access to technology that they didn't have before?
Great, Ben. Sorry, I was on mute there for a second. Yes, so herbicide technology has been important to corn, soybeans, and cotton. It's one of the major traits that give farmers real value. And in sorghum, which is really a cousin of corn and grown in the Western Corn Belt in the US, where there's less water, so it requires less water to make a crop than corn. Herbicide resistance gene can be very valuable because in these dry climates, using a pre-emergent herbicide, which is sort of activated by rain and protects the crop against different weeds, is sometimes a difficult proposition. So we've developed a herbicide that you basically spray over the crop. It's a technology developed through tissue culture that is embedded in S&W, so that's a proprietary technology that we have. And we've used it to create, over the last 5 or 6 years, basically what we call double team sorghum. And it's called double team because you need a gene and you need sorghum herbicide that you spray over the top, as I said, to control the weeds. So there's 2 active ingredients together. And this is a crop that we've launched this year. So the first plantings are in the market this spring, and the first crop will be harvested here in September, October of this year. And our first big commercial year will be next spring. So we are producing seed that we will clean and sell to farmers next year. And we think that the initial market introduction is going to be 30 to 40% of the sorghum growers. And then over time, we're going to also see, we believe, corn acres converted to sorghum because there'll be better weed control in sorghum and the yields will be higher, and there'll be benefits to farmers, which of course is the goal of all of us here on the panel today, is to create crops that farmers can make more money on. So we're pretty excited about double team. We've got a couple other traits coming in the future, another one in sorghum and one in alfalfa. And as you said, it's a long development time, and I've been in the business a long time, and I'm kind of tired of waiting this time. So I'm pretty excited. We're finally in the market, and we're finally going to have a trait to sell with our proprietary germplasm in sorghum and in alfalfa here in the next couple of years.
That's great. Thanks, Mark. And one thing I think investors need to be sure to note here is when we talk about herbicide tolerance, the reason why this is a big deal is because, crops that are planted on fields that have a lot of weed pressure, those crops, there's a tremendous amount of pressure put on yields of those in those fields. So, if you're a home gardener and you got weeds that crop up here and there, it's not really that big of a deal. But when you're a commercial farmer here and you've got weeds kind of pervasive throughout a field, those weeds outcompete the crop that you want to grow for really important resources, and like most notably water and nutrients. And so especially when you're a farmer of a crop like sorghum that's planted in relatively drier climates, every drop of water is important. So when you launch a product here like S&W is doing that has the ability to combat weeds, that's in a crop that really never had that potential, that's a really big deal. So Mark, thanks for that overview. And and I think investors should really take note of kind of the significance of this product here within the sorghum market. Now, turning to Federico, you talked about HB4 on a high level, the drought tolerance trait. I think it's pretty safe to say that everybody listening here is pretty aware of the pervasiveness of droughts. Seemingly every year we find out about record droughts happening in considerable parts of the U.S. and major droughts abroad as well. You talked about wheat and soybean being massive crops here planted across the world, and drought is seemingly a challenge everywhere. So farmers in wheat and soybean today, do they don't have access to drought tolerant technologies? Is that correct? And if they don't, what is the benefit to farmers that would plant your HB4 trait, should drought conditions arise?
So basically today, the only crop in which there is a drought tolerance event available is corn. And that technology results from an earlier approach to the drought tolerance. So it's geographically limited to areas where drought is almost chronic, because it does create yield under drought, but it has a yield drag or a yield penalty in otherwise normal conditions. So one key feature of HB4 is that we, in a way, uncoupled the drought protection effect of improved yields under drought to the yield penalty effect that was associated to the earlier technologies, particularly the one that is available in corn. So these are crops that give you a benefit in the downside, but do not sort of cap the upside, if you will, in otherwise normal conditions. Now, this is also important. This is not yet available in North America. We're starting to make this significant in South America as we ramp up inventories, and we are in tens of thousands of hectares in the region, generating different varieties and getting ourselves ready for a broader launch. This is also important for areas in the Americas where you can have 2 crops a year. So in some parts of South America, you can have winter wheat and summer soy. And when you have 2 crops in 1 year, water management becomes even more critical, no? And being able to have the efficiency of drought tolerance in the double cropping system basically enables and makes the double cropping approach a winner over the monoculture of soybeans, which is kind of the predominant practice, particularly in the Southern Hemisphere. So I think those are 2 important elements, the uncoupling of sort of the benefit from the yield penalty and the double cropping enablement that farmers are to expect from the HB4 crop system.
That's great. Yeah, very, very interesting, powerful technology. If farmers are able to, have effectively the insurance benefit of, securing yield and should drought conditions arise, but not be hurt, by the genetics if drought conditions don't materialize. So very interesting technology you guys have developed here. And I wish there wasn't a need for this product in the world, but I'm afraid it's coming into the market at an important time when there should be pretty considerable demand here. Very good. Well, thank you, Federico, for that. Mike, I'd like to turn to you with a couple of questions. So you talked about cover crops on a high level. This is a pretty interesting concept that's really new in, well, I think, really beginning to get broader understanding in agriculture, but I think a lot of investors still don't really know what that means. So first, I'm wondering if you can talk a bit about what cover crops really mean, kind of what the benefits of those cover crops are to farmers, and then also talk about what cover crops are in the market today and the economic benefits that you think your product has versus those alternatives. And Mike, you're on mute.
Typical Zoom problem.
There we
right?
go.
Yeah, thanks, Ben. Happy to do that. And I think it's a good follow-on to Federico's comments. When Federico mentioned 2 crops in a year, I earlier mentioned, three crops in 2 seasons, the same concept, right? Fitting in between a rotation, whether that's a true rotation or a monoculture system like Federico referenced with soybeans in the Southern Hemisphere. But the concept with cover crops is really an opportunity for a grower to be able to really kind of make his fields forever green. That's a big concept that you'll hear in regenerative ag. And what it means is you're planting a crop during the off season, wintertime in the Northern Hemisphere on what otherwise would have just been fallow ground. And, and again, it fits between a traditional 2 crop rotation here in the Midwest where I am, something like corn and soybeans. But the concept is, and why it's gaining traction are the benefits that it brings both environmentally and from a soil health standpoint. So cover crops help to mitigate soil erosion. They help to mitigate nutrient runoff, which is a big issue with the nitrogen and fertilization practices that happen in the Midwest and how that impacts the ecosystem and our tributaries here. It builds soil health, so it helps to regenerate the soil and to bring more microbial activity back into the soil. And and while it's Ben, you're exactly right. I think it's still a new concept. I would peg the Midwest somewhere between maybe 10 to 20% of the acres at a max that are farmers that are doing cover crop practices. But there's been a lot of studies done over the last probably 10 years that suggests there's a yield benefit that happens because of those improved soil benefits. And, it could be anywhere from, a couple bushels of soybean increase or 3 or 4 or 5 bushels of corn increase. So that's the benefit. Now, there's a cost to it, right? This is an investment that a farmer's making. So the farmer has to first purchase cover crop seed or cover crop mix. It's not expensive relative to the crops we typically plant in the Midwest, but they do have to purchase that. And then they have another cost where they terminate that crop. They have to spray a chemical application to terminate that crop to get it out of the field so they can come in with their follow-on crop, which they're typically no-tilling into that cover crop. So farmers are probably investing somewhere between $30 to $50 an acre on cover crops. You asked about the types. There are a lot. The predominant one in the Midwest here in the U.S. is cereal rye, but there are lots of things that are planted, radishes and a lot of Dutch mixes that go into the field. And in Europe, I know there's a lot that happens with other crops like mustard and things of that nature. So it's a wide variety of very low value seed that gets planted to really give that farmer that opportunity for the benefits that come along with that forever green in their soil. So we'll talk a little bit more about our economic case, I think, but what we present, and our tagline is the cash cover crop, a real important concept. I like to position us as a rotational crop. We are a true rotational crop with a margin opportunity, but we get that added benefit, like I mentioned, of the soil health and environmental benefits that come along with a cover crop. And that's really where we can distinguish ourselves in the marketplace.
That's great. Yeah, very, very interesting. You guys developing a novel technology here that's got both an economic and environmental benefit. I mean, that's when you combine that, that's how this next generation seeds, I think, really take off. Perfect. So we talked a lot about the value propositions here, and what I'd really like to pivot to right now is kind of some product or technology specific questions. Mark, I'll start with you here. Why isn't there herbicide resistant sorghum, really pervasive throughout the market today? And, you talked about your applications of tissue culture. What other breeding technologies have you really, have you introduced to really allow for this product to be developed, when others haven't?
Sure. So we are focused on non-GMO technologies. So we actually don't do much ourselves in gene manipulation, but we have worked with other partner companies to work on the molecular biology part of some of our products. For instance, our alfalfa product was a partnership with another firm. But our tissue culture technology, is really focused on herbicide resistances, and we're looking at not only sorghum, but herbicide resistance in some of the other crops that we're in. We are a little different company than some of the big companies that you mentioned, Ben, in your opening remarks, in the fact that more than half of our sales are perennial crops. So, they're not crops necessarily like sorghum, which are planted every year. They're crops like pasture crops and alfalfa, which are planted 1 year, and stevia in our case, which are planted 1 year and then allowed to stay in the field 3, 4, 5 years in some cases, in some markets. So there's things that bind this smaller up and coming aggressive companies like you have on your panel today. So we do sell, we do use inoculants in alfalfa like Federico sells in soybeans, and we are obviously interested in cover crops, as Mike is trying to make a market in, because most of our sales is perennials. And so, I think these are the places where the smaller companies are looking for innovation, where they can make a mark in the market, where most investors think that only big companies can dominate. But I think that there are threads of cooperation and products between the three companies that you have on your panel today that will show people that there is up and coming technology and innovative companies that are sort of making their mark in the ag business. And it's going to be an exciting time for ag, especially with the high commodity prices that we're all experiencing in the market. This means that farmers have a lot of profits and are willing to spend it on new technologies like the ones that we are all offering. So it's a heady time to be in agriculture. It's a good time to be an investor in agriculture. I think it's certainly a good time to be an operating company in agriculture, and we're pretty excited. These are the times that companies live for, when prices are good.
Yeah, I mean, I think that's exactly right. Great time to be in ag, and especially when you talk about the technology that you're using and that you're using in conjunction with partners. There's a real convergence here of a lot of different technologies that enable smaller companies to compete, I think, in a world where maybe they hadn't historically. So great that you guys have kind of access to a lot of different technologies to enable you to develop these products. Federico, I've got a somewhat similar question for you that I had from Mark. With soybean and wheat planted again on hundreds of millions of acres globally, major seed companies, I would think, would have no doubt wanted to introduce drought resistance traits, like they have with corn, as you noted earlier. But Bioceres is the only one to do it. You talked about how you've developed a product that doesn't have negative yield and when there is no drought. But I'm wondering if you can maybe elaborate on how you were able to develop these products in two major crops in ways that the ag majors just couldn't do.
Well, thanks, Ben, for that question. I don't know that I have the right answer, but I'll tell you what I think. I do think that the Major companies today have, at least in the biotech side, an R&D process that is dominated by the chemical industry, very successful at developing binary solutions, things that either kill or fail to kill another living organism, but not too successful at developing quantitative solutions, non-binary technologies that often show a high level of interaction with the environment. Drought, improvements in yield due to drought tolerance are not similar across all geographies and across all conditions. And I believe that one reason that explains perhaps our success is that we took a quantitative approach, more like the breeding industry does, in developing the drought tolerance event that we currently have. So that is one element. A second element, I believe, that is equally, if not more important, is that the technology itself is counterintuitive in nature. If you look at the earlier attempts, I believe that almost 20 years ago, Monsanto and BASF announced like $1 billion JV to specifically develop drought tolerance. And not much resulted from that effort, but the consensus then, or the leading thinking at the time, was one of water preservation. How can we engineer adaptations into plants that help them retain and preserve water? What we did with HB4 is completely the opposite. It's actually helped plants avoid the photosynthetic shutdown that often results from water preservation. I mean, if you close the stomates, which are the pores through which gas is exchanging in the leaves, you don't generate any yield. You preserve water, but you don't generate any additional yield. So the fact that HB4 works in a counterintuitive way, that where plants continue to consume water for a few more days than what they would normally do, and the quantitative approach to the breeding, I believe, explains the reason why we have this opportunity today, from a historical perspective, I should say.
Yeah, no, that's interesting, and I hadn't considered that kind of framing of kind of the binary nature of other major biotech events. So no, very interesting framing, and whatever the reason is, you've done it and others haven't. So very, very compelling. Mike, I'd like to turn it over to you. Wondering if you can talk a bit about kind of how technological advancements have let you, bring this crop to market such that it's economically viable. I mean, pennycress, the base, when you started, it wasn't something that would make farmers money. So, what have you done with this crop over time, and how have technological advancements enabled you to build this company as it stands today?
Yeah, sure thing. You hit the nail right on the head, Ben. So, I mentioned earlier, we started with a weed. So, we're talking a lot about herbicide tolerance to be able to kill weeds and allow crops to get to their full yield potential. So, we started with the weed, and we're trying to turn it into a crop. And, a good analogy, I think, if you think about the time it took to take oilseed rape and bring it to the product that we know in the marketplace today as canola, all those compositional changes, that took, probably over 30 years of a lot of traditional breeding effort to get to that point. And, we're really lucky to live in a time today where we have all these exciting new tools that can speed up those timelines. So, the things that we had to focus on in converting field pennycress into CoverCress and into a viable new, and novel oilseed crop. One, we wanted to work on the oil. We wanted to improve its quality and its quantity. Two, we wanted to work on the composition of the seed itself. So things that would help with lowering fiber and aiding with germination were really important. From a breeding standpoint, we've focused, like everybody does, on yield. So we're looking to, as we advance our germplasm generations, to improve our yields and also to improve our maturities. I mentioned earlier on the cover crop side that farmers terminate cover crops, and they do that so they can get that next crop in, that next major crop in. So we need to be in a spot where we can be out of the field in a timely way with our harvest, so we're not delaying the planting of the follow-on crop. And then there's some other benefits that have come along, as well as where we've improved the protein content as well in CoverCress, which also is a good selling point for the feed market. So when we get to a stage where we're crushing, extracting our oil, which will go to renewable diesel, biodiesel market, we need to have a good viable market for the meal that's left over. So, I mentioned kind of what we've done. How we've done it really are two ways. So through breeding, traditional breeding work, we've improved yield and maturity and germination through gene editing technology. And we work with CRISPR-Cas9. We have a license to CRISPR-Cas9. That's where we've been able to edit the genome to lower the fiber, which we've done and is in our current commercial product. We have a patent on that technology. We've lowered the uric acid content as well, which is not only improve the quality of the oil, but also increase the oil. We have a patent filed on that. And then we're a brassica, and like a lot of brassicas, so if you think of mustards and horseradishes or broccoli, the brassica family, all those products have a certain taste and odor profile that we'd all be familiar with. So we needed to eliminate and what causes that are glucosinolates. We needed to eliminate the glucosinolate that's in our brassica, because again, it not only is important from a intake standpoint for feeding animals, but also there could be some anti-nutritional impacts as well at higher doses. So we have that as our third really important gene edit to get to our final commercial product. And we have a patent on that actually. And now we're working on making sure that we can get the right performance in the plant. And then we're using gene editing to look at other compositional changes. We are looking at herbicide tolerance for all the points that you made, Ben. We don't see it as a need to have to spray over the top and compete and with weeds like the summertime with the other crops, since we grow in the winter. But it would be a really good rescue tool for some of our farmers to have that technology. And then there are other things where we're even looking to increase our seed size. We're a very tiny seeded crop, very, very similar, if you could imagine, maybe like a flax seed or a sesame seed. So very small. So the more that we can improve its size, not only does that help with yield, but also a lot with handling as well. So that's some of the basics in terms of where we've spent these last 8 years with our really focused R&D work to take pennycress and improve its composition and yield and maturity to make it a viable rotational crop.
Very good. That's very interesting. You guys have certainly been busy over the last 8 years. And what I'd like everybody on the line here to take away from what these leaders all just outlined is that these very small companies on a relative basis, when you look across the ag space, are really bringing these disruptive products to market here because they're either able to use new technologies that are much more affordable, or they're better able to use legacy technologies. So there's a considerable convergence here, I think, among the technological advancements in the space and breeding efforts to really bring these next generation products to market. And again, these are multi-decade life cycles that that really are set to take off because of these really next generation of companies being able to do technology better than the big boys can. So that's I think a very compelling value proposition here for the space and for these companies individually. Before we go here, a lot of investors hear about these products and think, well, that does make sense, but what's the revenue this year? I'd like to maybe talk about kind of the near term and long term outlook here very quickly before we depart. Mark, I'll start with you. You talked about how your herbicide tolerant sorghum's in the market right now, but next year is going to be kind of the first big year. Can you talk about kind of the trajectory that you see for that product, in year 1 to year 2, and then year 2 and beyond?
Sure, Ben. Obviously, we're very excited about the product because it is so valuable to farmers, and there is an effort on all seed companies at the very beginning of these products to increase the amount of seed available for sale. So we've done that, and we've set ourselves up to have a big year next year. Our sales have been growing at 25 to 30% compounded annually in all of our species overall. And for the last 3 years, we've done those numbers. So the company's grown, when I came, 4 years ago from sort of the $30 million range to about 100 million we're expecting next year. And the traits are just starting to kick in. So the point you made about the long development life cycles are just starting to help us. So we've spent a lot of time and money on branding, on having sales and distribution to reach farmers around the world. And we think now our technology basis is really starting to fill in the products that we have to offer to farmers. So that 25 to 30%, just to put that in some context, it's a super high annual rate of growth. If you look at the big four that you mentioned, Ben, at the beginning of this conversation, they're growing at 4 or 5% a year. And, and our traits are just kicking in. So we believe we will become more profitable and we will be able to maintain those kind of growth rates here in the next couple of years. And we've put out a plan that people can look at on our website that show the 3, 5, and 10-year plan for the company's profitability and sales. And so I would encourage people who have an interest in S&W to take a look at that and to get on Robert's schedule, and we'd be happy to talk to anybody about the details of S&W.
Perfect. Thanks, Mark. Yeah, high growth and operating leverage combines to be long-term profitability ramp. So very exciting time there at S&W. Federico, your HB4 soybean and wheat is not yet reached commercialization, but you're darn close. I'm wondering if you could talk about kind of what reception is from your customers and how they're looking to embrace this technology once it enters the market.
Sure, Ben. So as I said before, we're in the process of ramping up inventories. The 2 critical approvals that are required for a broad launch. In the case of wheat, that is an approval in Brazil, that is the major importer of Argentine wheat. And then in the case of soybeans, an approval from China, that is a key importer of soybeans coming out of Latin America. All other approvals are already in place. We are going into a wheat season now with 60,000 hectares planted with HB4 wheat. We're coming out of a soybean season with over 20,000 hectares, 23,000 hectares planted with different HB4 varieties. So we're in a good shape now to significantly speed this up and take advantage of a technology that took us almost 18 years to develop and be where we are. As a company, we believe that there is a 25 million hectare opportunity in the Americas for HB4 soybeans, 10 to 12 million in the US, which is about a third of what the US does, particularly in the Dakotas, Minnesota, the southern Canada region, and some areas of the South, not so much in the soybean belt of the Midwest. In Brazil, there might be 8 to 10 million hectares in the Cerrado region and some areas of the soybean production areas in the south that are drought prone. And then there's little less than 5 million hectares in Argentina and neighboring countries that combined give you this 25 million hectare opportunity in soybeans. We believe in wheat, there is a 4 million hectare opportunity, almost 50%, 40 to 50% of all the acreage currently produced in Latin America, where the technology can have meaningful value. And that is essentially what we want to pursue in the next 3 to 5 years. I think that in 3 years from now, we can be probably 3 times the company we are today. We have an LTM revenue base of about $175 million with an EBITDA margin of 25%. I think we can get to 3 times that number with an EBITDA margin closer to 30 as we gain on operating leverage. And probably more than 50% of that growth will come from this particular family of products, the HB4, soy and wheat that I alluded.
Very good. Yeah, massive opportunity here for American listeners here. 25 million hectares, that's 60 million acres. for soybeans specifically. And when you're the only product, in that over 60 million acres that can combat drought, I think there's a real opportunity here, especially if it's a small company like Bioceres. Both Bioceres and S&W, I think these growth trajectories that both Mark and Federico alluded to are just not fully considered here at the valuation. So, very exciting time for both S&W and for Bioceres as these launch. Also exciting, Mike, for you at CoverCress here. You guys are kind of about to set pretty big planting here this coming fall. Talk about what you're targeting this fall and where you want this business to go here over the long term.
Sure thing. Yeah, I look forward to talking about our revenue here. Like Mark and Federico have a chance to do, being a pre-commercial business. But so our first commercial launch will be this fall. So again, we're a winter crop, so we get planted in the fall. Very small scale, around up to about 1,000 acres. Our initial market is our grain is going to go in its whole grain form as an ingredient into chicken feed for broiler production. As we continue to ramp up acres, we have plans to go in 2022 on up to 50,000 acres. And then if you think as we go forward over the next 10 years, we're roughly doubling our acres each of those years on an annual basis. And from a production standpoint, we're all, in terms of the tonnage that we're producing, we're probably tripling that. So that gives a little bit of sense of the ramp up. Ultimately, in the 2024, 2025 timeframe, when we're on a large enough number of acres and we get to the product combination that has that glucosinolate removed, as I mentioned, our higher value markets are going to be oil for renewable diesel and biodiesel production, and then the livestock market with our high protein meal that we have. We're very similar oil and meal protein composition is canola, just to give folks a quick comparator. And the reason we are looking to go to that renewable market, because we grow in the winter, we have a very low carbon intensity score that's associated with CoverCress, which is very attractive, obviously, to the crushers and the fuel producers downstream to use our oil as a feedstock, and it ultimately, whether it's biodiesel, renewable diesel, or even sustainable aviation fuel. So that's kind of the plan. I'll keep it short because I don't have all the numbers. I could share numbers, but they're part of a model, and there's only one thing that's true about every model, and that it's wrong. So
I'm familiar with that. Well, very good, very, very helpful, and very exciting time at CoverCress as well. So we'll be watching that fall planting pretty closely here. Everybody on the line, I think what you heard here is that we've got 3 different approaches to these kind of next generation technologies, and again, I think these are long multi-decade life cycles. In this first year or two of a commercial launch, it's relatively limited. But as these businesses scale here, I think the opportunity is just tremendous, and I think the public market generally overlooks that. So I think everybody on the line just heard 3 very good overviews here from these companies.
Ben, if I could jump in, I'm going to turn the table to you for just one question. I know we're running late here on time, but with the increase we've seen in agricultural prices over the past, what's it been, 12 months or thereabouts, what has been the change you've seen in interest from institutional investors towards sort of this group as a whole?
Yeah, so great question, and certainly the commodity rally has brought renewed interest to agriculture and investments in general. And for those not aware, over the last year, as Robert said, corn and soybean prices and commodities in general have basically doubled in price over that time. Really, it's about as good of a time to be a farmer as it's been in 7-8 years. And as was alluded to earlier on the presentation, a great time to be an ag input company too. So there definitely is increased interest from institutional investors. But one thing that I always try to point out here when you talk about commodity fluctuations is that seed companies in general, I think, have a model that's much more inelastic than a lot of other ag inputs. So, is it better to sell into a market with high commodity prices? Yeah, absolutely. But if over the long term, I think the prices of these seed inputs here that have premium genetics are going to be much more inelastic, and therefore I think the opportunity for these companies on the panel today is really almost separate from commodity prices in general. So definitely renewed interest in ag. You see that in some bigger company valuations over the last year. But I would contend that interest really should be, in the long term here for companies, exposed to the seed side like these three are today, because I think the upside over the long term is tremendous here, with or without high commodity prices. So great question, Robert. Thanks for jumping in on that. Now, really quickly here, just wanted to recap, that I do think these are very interesting approaches to leveraging technologies here and developing next generation seed. These long life cycles are in the very early stages. And I think when you look at any of these three companies and the seed industry overall, I think there's a lot of opportunity, especially in the small cap side, for investors to generate some real alpha. So, I'd like to thank everybody here on the panel for joining today. Robert, thanks a lot for the opportunity to host this. I think this has been really informative. There's a lot more to talk about here, but I think that's a good place to leave it. So thanks to everybody for joining. And with that, we'll wrap it up.
Thank you all.
Thank you.
Thank you, Robert. Thank you, Ben.
Thanks, everybody.
Bye-bye now.